Before we get started today, I want to thank you for checking out this video. Please like and subscribe to my YouTube channel. I also want to encourage you to check out our sponsor, protosusa.com. They have a website with a lot of unique designs on t-shirts, shoes, art, and yoga mats, other things like that. Please check them out. Let me know what you think. We'll go ahead and get started with today's video. Originally, I was going to do a different video today. I'm going to talk about my oil trading strategy, but I decided to follow up on yesterday's trade instead because I told you that day before yesterday I was looking to make an Apple trade, and I had an alert on this candle right about here. The alert went off yesterday, and I waited till the end of the day to decide whether or not I wanted to make a trade because the market has been dumping a lot, and I didn't want to get into this too early. The market did dump, and it closed in the lower half of this candle, so I decided not to enter this trade yesterday. So what I did is I put another alert about right here for today. I said, well, if Apple comes up into this area, I'll get an alert, and I can look at this trade and decide if it's something that I want to trade today. Well, the alert went off this morning. The market went up quite a bit this morning right after the open. When the alert went off, I logged in, I looked at where Apple was, and again, I decided, as long as it stayed below this level right in here where this blue line is, I was going to hold off on the trade just to make sure the market didn't dump again. To be truthful, I didn't think it was going to dump today, but one reason I wait till the afternoon to adjust trades and wait until the afternoon to make trades is so that I can see which direction the market's really going to go. As you can see, it really dumped again, so I did not enter the trade today. I've waited another day. I'll probably set another alert in this area for Monday to see if I want to enter a trade there. And let's take a little bit closer look at what it looked like on a lower time frame chart. This is the 5-minute chart. This is not the normal 5-minute chart that I use. This is doing just has RSI on it, but you can see, overnight it actually came up and probably hit my alert for the trade open this morning. It probably had already above my alert and went up, and then it started to gradually come back into this support area here. If I were day trading, what I would have done is watch to see if this wave here held. I really like this type of setup for day trading, but as you can see, it didn't hold. In fact, it acted as resistance for pretty much the rest of the day. In the afternoon, it got a little above it and chopped around a little bit, but going into the last hour of the day, I really don't want to enter trades if I were day trading, although I wasn't looking for a day trade. I'm going to go ahead and show you what kind of trade I would have been looking at today had I entered it, just in case I don't follow up on this Monday with you, just so you can see what kind of trades I look at. This is the Apple options chain for 21 days out, which is 21 to 30 days is where I like to enter my trades. It's after hours, so these spreads are kind of screwed up, so you can kind of ignore these spreads just because this is after hours, and right now the market's not open. But what I would probably be looking to do is come in around this delta, anywhere from a 15 to an 11, if I can get a decent premium, and either do a cash secured put right here at the 200 level, or if you've got the cash available, you could do a covered call. I like the covered calls on a good stock just because it lets me adjust a little bit easier, at least in my opinion, that it does than these naked puts can sometimes. So I do prefer the covered calls when I can get into them, and I kind of stress good stock there. If this was a stock I didn't really feel great about, but the price action looked good, then what I'd probably do is do a put credit spread. Maybe I sell the 205 and I buy the 185. So the most that I could possibly lose would be $2,000 if everything went bad, although I would probably close it before there. So just to give you an idea of what that would look like on the chart, if let's say I sold the 200 here and I got $1 for it, and let me see what we have on the chart. So what I like about this is now 21 days out, I've sold this 200. So if you kind of look at the support I have, I've got this low here that is support. I've got the 68 or 61 and the 78 Fibonacci retracements from the weekly chart here support, and I've got a trend line that I drew on the weekly chart as support. Plus I've got another support down here around 195 as I come up on the 200-day moving average. So that's why I like these types of trades. Now, Yeah, I don't get huge returns from these trades. I get anywhere from 12 to 25% typically, depending on how long they're open. But look at the amount of safety I have. I have almost a 10% safety cushion right here if I had sold the 200. Plus, I've got all these levels of support, including this gap, so I would have had support right in this area too, probably. That's the way I like to trade these. That was a trade I'd have been looking at today. Now, obviously, I probably would have entered it up in here, and the VIX would have been lower, so I would not have got the same premium. So I probably would have had to sold the 205 or the 210. But those are the trades I look at. Those are the type of trades I try to get into on the stocks that I enjoy trading and that I follow. Apple's one of those. I like where we're at right here. But I've got to see a sign that we're going to go up and a sign that this 50-day is going to act as some sort of resistance. And right now it's not. It went below it, closed below it, it went above it, came back to it, it went back above it, closed back below it, and then of course all of my moving averages right here are starting to turn and starting to cross. Those are not good signs. You got a big cross right here because of this big drop down, but after it came back over this 50, it was a pretty good area to get back into it. This cross is a little slower, so it's a little more concerning to me. However, if I'm down at 200, I've still got a long way, and I've got 21 days to try to correct it. And hopefully at some point during that time period, I would find support. It'd go back up. If not, I would look at adjusting here possibly. I would look at adjusting here possibly, here, and even down to here. I would look at it, potentially adjusting it. And by adjusting it, obviously you could close it and take whatever loss there was. If there's only if it takes 14 days to get down here, then you're only going to have 7 days left. So you might be able to break even or make a small amount of money. Or you could roll it down and further out, maybe another 21 days and come all the way down to a 190. Somewhere in that range. You probably wouldn't get any lower, but you probably get to a 190. And nothing else, you've reduced how much money that you would have to invest in Apple should you end up owning it. And then you could just, if you sold the naked put or the cash secured put, then you could start selling covered calls. If you had your covered calls and you kind of hold on to it and play with it throughout, as long as it stayed above that 200. If it ever broke the 200, I'd be very concerned, especially if it closed below it. But that's what I looked at in Apple yesterday. That's what I saw today. I'm still going to be looking at it Monday if I can get a close in an area I like. If you have any questions, let me know.